You get one shot at adjusting. You have to make the decision of what's prudent for you and your family. Praise be Jesus. As we flip the calendar into July, we wanted to give you an update with some of the most remarkable headlines of the last decade that have flown below many people's radars, given how significant they are. What we've specifically seen in the last few weeks has been a chorus of our generation's greatest investors all speaking out and saying that gold is a key asset and that investors need to allocate to this. Specifically, I want to read you a few quotes. Ray Dalio, who is the founder of the world's largest hedge fund, again, one of our generation's most successful investors, said, quote, "I see the US and other countries heading towards having the equivalent of economic heart attacks." He continued, "The debt cycle process, which is underway now, has led to the breakdown of all reserve currencies." He shows the most recent 35 cases. What he is saying is that the idea that our dollar is going to preserve its wealth is naive. There is no precedent for this to happen. And the implications are, if we're saving in dollar instruments, Treasury bills, CDs, bonds, we have to wake up for what's coming. He continued saying that this devaluation of dollar-denominated assets historically has been especially significant, quote, relative to gold, quote, quote. He went on and said, any investors or their advisors who are doubting this, quote, should be examining history to understand why all prior reserve currencies ended being reserve currencies. Previously, he said, quote, if you do not own gold, you know neither history nor economics. A last quote from Dalio in these recent weeks, new from him. He said, quote, printing money also artificially lowers interest rates. What he is saying there is he is admitting what we have been talking about, and that is stocks, bonds, and real estate are artificially rich with this artificial involvement in interest rates. But he is warning people this is not going to continue indefinitely. Now, there are others. Jeff Gundlach, another investment advisor, fund manager who oversees approximately $90 billion, said that gold is, quote, a flight to quality asset, close quote, that people want to consider in light of what's going on. Paul Tudor Jones, one of our generation's greatest traders, said, quote, a reckoning is coming, close quote, to investors who are not positioned properly for this new paradigm. He even said, quote, a paradigm shift in American finance is underway, and that if people are not positioned for this, they're going to be hurt very badly. He talked about the Treasury bond. This is the US government's bond. It has ceased being, quote, a legitimate flight to quality asset, close quote. That is incredible. He is saying the bedrock of the fixed income markets is no longer a quality asset because of our debts. That this doesn't mean America's ending. This isn't Armageddon, but this is saying if you want to navigate through this paradigm shift that is coming in finance, you have to wake up and you have to position yourself differently. One last example, Bill Fleckenstein, arguably the greatest short seller of our generation, had the last short-only fund standing in the dot-com bubble, admitted in recent weeks he is now 50% allocated to physical gold. That doesn't mean he's going to be that way forever. It doesn't mean you have to get to that level. But what we are seeing here is 4 of the great investors of our day telling us this shift is at hand. It's real. It's dangerous if you're not awake to what's going on. Let me make the analogy. If you were a pilot and you were transporting your family into a storm, and imagine you're in this little craft. If you've ever been in a situation like that, you're really susceptible to the weather. Imagine you have 4 of the greatest fighter pilots of our day who have flown into, navigated, and profited from similar debt fiascos that have happened early in our lives. And all 4 of them are telling you, warning, you must adjust your path. You must adjust the way you're flying, or you're susceptible to a lightning strike. Now, you have at the same time people on the ground saying, hey, we don't see any problem. Looks like blue skies from where we are. You get one shot at adjusting. You have to make the decision of what's prudent for you and your family. Now, people, this is not like marriage where you want to think of it as, oh my gosh, I have to make one decision for my whole lifetime. This is a portfolio adjustment. You should be nimble and able to say to your family, to your advisors, I want to have some of my wealth in this asset class that has allowed families to navigate storms throughout history. So not only have the world's central banks continued buying gold, but recognize what they're doing is essentially insider information. They create the currencies that we live in, the dollar, the euro, the yen, all the world's currencies. And they are shifting. They are selling dollar assets, increasing their allocations to physical gold based on what they see coming. They're not saying, oh, okay, just give me the ETF, just give me a financial flavor of gold. They're saying they want the physical. And just in this last week, we've seen an intensification of that, whereas now Germany and Italy, who allegedly hold the world's second and third largest allocations to gold of any nation, are saying they no longer want their gold in the financial system. They want it physically back within their borders because, as the German parliament said to its citizens, it's not just legal ownership, but physical control over the gold that really matters. You don't think they understand they could buy a financial ETF? To them, they understand that this is having a financial expression in gold is like having a timeshare. It's just not the same as owning the real physical asset. So we have gone back and we've looked again, updating our numbers the last 10 years. If you had allocated a portion of your wealth, of your cash into gold versus, say, Treasury bills, you would have outperformed by 4 times. So the process of saying beyond 6 months expenses, beyond a year's expenses, I really want to have some diversification into gold cash and not just physical cash, whether that is in your retirement plan or in a taxable account, has been very profitable. Lastly, look at what's going on. If you go back now with the most current data we have through 1, 3, 5 years, 10 years, 20 years, look at this millennium, look at since gold has begun trading freely. You have 7 periods. Gold has outperformed the stock market in 5 of those 7. And the 2 where it underperformed, QE was raging. And what Dalio was alluding to, QE artificially has supported the markets by suppressing interest rates the way it has. You want some physical gold, you want a proper allocation in your portfolio now. Believers, you don't want the regrets of knowing something was happening and feeling like you were just a deer in headlights who did nothing. It's easy. It's not permanent. This is a solution, a step you take ahead of this storm. And then when the clouds clear and the next opportunities begin to really rise in America, history says you will have a wonderful stored, a wonderful treasure chest of wealth at that point that you can then deploy into what's next. Reach out to us. We would love to talk with you about crafting a solution for your family. God bless, and God bless America.
Aloha everyone, this is Jason Jones for LifeSite News. We hope you enjoyed this video. For more content like this, check the link in the description. You can also connect with us on social media to stay up to date with the latest news on life, faith, family, and freedom. Thanks for watching, and may God bless you.